Economist here. So in today's video, we are going to explain the K-shaped economy. Many articles I am finding out there talking about the K-shaped economy really explain in detail what is happening, but they don't explain why it's happening. Now, the idea of a K-shaped economy, this really comes from the understanding that there is a certain class or group of people out there who seem to be doing very well since the pandemic, and they are recovering, they are getting their wealth, they are spending like crazy, and everything seems to be hunky-dory for them. But then on the other side of it, here we have this working class, average, everyday citizen who seems to be having ever increasing amounts of trouble trying to make their bills, coming up with the idea of like gas and food and all the insurance and everything that's gone up like crazy lately, has then left people questioning what is it that's actually happening out here, because all these articles do a great job. They explain it. Like, here's one from CNBC: wealth inequality and the K-shaped economy are more striking than ever, data shows. So here it is. They have all the data for it. They talk about it. They even go in and explain in detail some of the issues that are being faced. The K-shaped economy is apparent as ever, and it isn't going away anytime soon. This economist says as they start going into this article. Here's some of the things that they had to say in it. This is not a cyclical or temporary phenomenon. All right, that's something that Mark Zandi, chief economist at Moody's Analytics, said. This is a structural, fundamental issue. Absolutely it is. And now a lot of times people are going to go and they're going to point the finger at politicians and all kinds of people out there, and there's reasons for doing that, and I totally get it, and there's plenty of blame to go around. So if you want to look for the person and people and things to blame, well, there's plenty of it out there, and you're probably going to find plenty of evidence of it. But then there's an underlying economic force playing out here. So it's pretty interesting to hear some of the things that they had to say inside of this. The net worth of the top Americans, top 1%, hit record share of nearly 32% of the third quarter of 2025, the Federal Reserve reported. Wow. 1%, 1%, the top 1% on 32% of the stuff, right? Let me see if I can find it down here. There was a really interesting part something that I have tried to key on quite a bit. And sorry, my computer's acting really slow here. It's talking about the low wage earners. We're seeing their fall in wages, fall in their abilities to continue to conduct themselves in the way that they normally had, while at the same time, the top 20% of households seem to be doing quite well. And this is what I have been sharing for quite some time here. Now, this is the spot on. It says the total relative outlays, a broad measure of spending and non-mortgage payments by U.S. consumers in the top 20% hit multi-decades highs last year, and data analysis conducted by Moody's found, that's from what Moody's found, the other 80% tumbled to new lows, the data showed. And now there it is, something that I have said many, many times. The top 10, 20% of household incomes are doing the consumption. The bottom 80%, they're falling away. It's getting worse. And this is not going away. This is a problem that is going to continue going into the future, so long as there's ever increasing amounts of new money that come into the system. So now that we know that there is this problem and we know that it's not going to change, how is this occurring? What is taking place? Why is this happening for so many people out there when they're just trying to make their way through this world, right? They want to show up every day, be somewhat dedicated to their job, and have a decent existence on account of it. But yet here it is. This article is telling you that if you go down that road, if you intend on doing that, your capabilities of being able to achieve what it is that you would think would be a standard of living that is appropriate for you is going to get further away from your capabilities. That's what this article is telling you right now. So, what is it that's happening? We have ever increasing amounts of new money that pours into the system. When new money comes into the system, the people who have first access to it, they spend it at face value. As that money starts to pour into the system, the added consumption drives up the prices, and that added increase to the consumption and price driving is the inflation that people are now very concerned about. If that new money continues to pour in and that inflationary pressures continue to build, then what will happen is domestic production ends up competing with foreign production, and the foreign producers out there start bringing in their items for sale, like whatever it is that you buy down there at Walmart and all the other places. This is the Chinese goods, all the foreign production that's coming in. This is exactly what is driving out the domestic manufacturers. People want to have those cheap goods. The people who had first access to it didn't want to spend it on higher price goods. They didn't want to spend it on the domestic manufacturing that was elevated. They wanted to buy cheap foreign production, and that's exactly what they did. Now, you can blame them for that, or you can look back into the Cantillon essay and realize this is something that he had witnessed from hundreds of years before he wrote it down. So to think that this is something new, it's not. This is not a politician's fault. This is the ever increasing amounts of new money that pours into the system. Now, why is it that this happens? Because of the luxurious experience that people want. That's it. It's their luxurious experience. They have worked very hard to acquire money and they want to use that money to enjoy themselves. And when they do that, the problem begins because the luxurious experience is the buying of foreign production. Now, it doesn't happen at first. At first, everything's really cool. And people say, hey, man, way back there during this particular slot of time, really awesome. How come they just don't keep it like that? It's because it's part of the transition cycle. The ever increasing amounts of new money that pours in gives that moment in time where everything looked awesome. We were producing the world's greatest stuff, sending that stuff out there to the world, and the world was sending us their money. They were sending us gold. We raised our standard of living, and everybody says, hey, man, we got the greatest standard of living in the world. The United States economy is the perfect one. Everybody knows exactly what to do, how to do it, and make it awesome for everyone. And I don't know if that was necessarily the case, but you get what I'm saying. It's like the average job was enough for that the individual with even just a remote capabilities of knowledge of being able to read, or not even that necessarily, could go out and get a job that's enough to take care of their life. They could rent a house, rent an apartment, buy cars, do all the stuff that they needed to do with just an average job. But now we're finding that that is further and further away from the capabilities of the average person. And now we want to blame somebody for it, but we also have to understand that we have moved away from that production, that productive economy that saved and raised the standard of living. We have moved into a consumption economy. So now the economy is only going to function if there is a lot of consumption happening. And if that consumption is being done at the top 20% of household incomes, then you can probably guess that the people who are falling further and further away from their capabilities of being able to use their job to be a consumer are probably not very important. You're not doing enough consumption anyway. Even if you were to double your consumption, you still wouldn't be able to compete against the top 10%. And that's what's crazy about it. I mean, that's what's really nuts to think. Is this how far we have actually gotten on this economy? Is that if you are not in a position in which that you are moving up onto the other side of the wedge, then you're probably going to fall down ever increasingly further away from the abilities to then acquire what it is that you would hope for to be like even a simple standard of living, right? That issue is like the camera flips because YouTube live streams are weird. But there's the chart. I don't know if you can see it, but you see that giant wedge right here? See, this is actually going the other direction, and you can't really see it. But anyway, right here, that wedge, that is the asset holders going up the wealth ladder and the average everyday worker falling further down the line. That link is down in the description. You can go look at it for yourself. Now, to think, what is it that the people can do? Because they want the politicians to do something about this. And that's a very dangerous thing because the politicians, I don't think, are very capable of doing anything at all to benefit you, but they will do something to benefit themselves. And to think that they would have to hurt themselves in order to provide you with a better way of existence is something that I just don't think they're going to do. Like, they might, but they're not going to, right? Nobody's going to. It's all about self-preservation. They will do whatever it takes so long as they don't get hurt in the meantime. So if you think about what it is that needs to happen here, it's not something that can happen from a political environment or any kind of banking or anything else like that. They are going to continue to do what they are going to do. And if you let them, right, it's going to continue to be this sort of way. Letting them is really coming down to one thing: you not taking action. That's it. Right? Letting them means that you're going to show up every day for your job and then not do anything else. You're not going to, you're not going to try for any extra flow, right? Meaning getting into, more money, extra, the money beyond the money you're already making, figuring out how to make more money, right? That is going to be something that letting them, right? By doing that, by saying that my day job should be enough and that I shouldn't have to put anything else in, you're letting them continue to increase their wealth and put themselves up higher on the wedge, and you're going to further go down the wedge. And I know a lot of people are going to get angry with that. They're going to hear me say that, and they're going to be like, "Oh man, you just want everybody to be a slave or whatever." And it was just like, "Don't do it. I don't care." Right? I mean, it's not up to me to decide what it is that you're going to do. I do not care if you don't do anything about it, and you would rather bitch about the politicians out there and hope that they're going to do something to change your life. That ain't going to work, but that's okay. I understand why you would want to do that. However, if you really want to do something about it and put yourself on the other side of the wedge, then what you're going to have to understand is that your day job is never ever going to be enough. And even if it is a good day job today, it's going to fall further down the line of its capabilities. So what is it that you have to do? You have to think, man, is there a way that I can get assets? What kind of assets am I willing to get into? Am I wanting the rental properties? Am I want dividend paying stocks? Am I wanting to get into business? Do I need to level up my education? There's so many different places that you can go with your money to get a return on that. And the investing in yourself is by far the best one. Now, understanding that there is some place that you have to go and you have to acquire assets at some point. Like the knowledge that you gain from your education has to be deployed at some point, and that is going to be into some sort of business that will then acquire assets in the long run that will eventually pay you. Not speculative assets, which are good for savings like silver and gold and Bitcoin and some of those things, but assets that actually pay you. Rental properties, dividend paying stocks, businesses, things like that. Even the stock market that's not dividend paying, by investing into that particular business, the business grows. This is a kind of an idea that you want to be moving into. If you are not taking that sort of position, then you can expect that your job is not going to carry you, right? And this is why you're falling further and further down the line. Now, I understand you may not like this. I understand that you may not like the idea of it, and you may be very upset with the possibilities of having to turn yourself into a capitalist, a landlord, right? Because what it is that you are going to do otherwise is most likely not going to be enough. I'm sorry. I really am. I wish it wasn't that way. I would much rather it not be that way. I just want to show up every day, 9 to 5, and then go home and call it good. Man, you know how awesome that would be? I would love that, but that's not going to be the case. And so to understand how it is that you can deal with it is to understand why it's taking place, why it is that this ever-increasing amounts of new money find their way up to the rich, and they find themselves ever increasingly further away from what it is that the average everyday person is doing. This is because of the ever-increasing amounts of new money. To think that that's going to change, it's not. There's nothing that can, even if it did change and they stop the new money flow, everybody falls into pain and misery. So no matter what, the working class is on its way to pain and misery. And if it did turn off, everybody falls into pain and misery. So just think about that. Right? The working class is on their way to pain and misery. No doubt about it. This chart shows it right here. Right? Just go and Google it you don't have to Google it. There's a link down in the description. Just go and hit the link. So you can see it there. And now understanding this and understanding how it is that we deal with it is understanding it from a personal point of view. It really is. It's cutting back on your expenses as much as possible. Yeah, it's painful. Nobody wants to do that. Everybody wants to drive new cars and wear new clothes and go travel around and enjoy experiences. But you can do that and never have the ability to ever do it again, or you can sacrifice that moment now, cut back as much as you can, and then start deploying some money into a return on that investment, whatever it happens to be. You got to get creative or not. I mean, you don't even really have to get that creative if you're really young. I mean, if you think about it, if you're young, you're in the best position you could ever possibly be in to protect yourself, because there's no better investment that you have other than being in youth and having time. Because time and compounding interest, there's nothing that an investor who is old can do. They can't do that. right? Only the young can do that. And so you have to think, man, that is the great opportunity for you if you are young. If you are older, then you are going to have to be very, very, very cautious on how it is that you approach what it is that you are investing your money into. A lot of people, they want to get very excited about these hyperbolic moves and stuff, and thinking that they can just make a single decision that's going to like absolutely overwhelm their position, and they will be like sitting in all the money they could ever want. Like, I believe that's a lot of people's hopeful expectations out there, almost as if it's like a lottery ticket kind of approach. And when I think about it that way, I'm like, man, if you're taking like a lottery ticket kind of approach to this, why don't you just go buy lottery tickets? Because that's probably going to end up being about as good of a result on it. Now, don't get me wrong, there are plenty of people out there who kind of know what they're doing and very disciplined and probably could take some pretty good speculative moves and do quite well with it. But for the average everyday person, it's not going to be that easy to do. And so to understand that if you are old, like, you were like me, 40 years old, drunk, in debt, had plenty of, had no money, had no, plenty of scarcity in my life, all that other stuff, it's not easy to switch that around. But the moment that you start stepping into the energy, you're going to start realizing the next step, right? And now part of that is just simply giving up some of the bad vices. The reason that you were drinking, the smoking, all the other stuff. It didn't benefit you any. There's no return on investment. And if you look back on the hundreds of thousands of dollars that you dumped into that stuff, if it had been put to even a simple, tiny return, you would have been absolutely fine today. But that's not the case. You didn't do that. And so now you're suffering the consequences from that, and you're feeling bad about it. That needs to switch, right? That feeling that you have right there. That needs to switch. You need to think, okay, what is it that I need to do even though I'm in a bad spot? I'm in debt, right? That's awesome. Really, it is. And I'm not going to tell you it's awesome because you're in debt, but you're recognizing that that's a problem, that it's the debt. And if you start moving towards paying that debt off, I assure you, one day you will pay it off. If that is your commitment, you don't care about investments, you don't care about anything else. All you care about is getting in flow, cutting back on your expenses so you can get that debt paid off. You move in that feeling, that direction, that energy, and you are committed to it, and you don't think about anything else. You don't think about the New World Order coming after you. You don't think about any of the problems that you are facing. You don't think about any of that stuff except for how quickly can you pay off this debt. And I'm talking like literally, if you have $15,000 on a credit card, if you have $20 in your hand, to take it down to the bank, put it on that damn credit card, and start paying that credit card off. When you get into that energy, it's not a matter of the money that you're putting into it. It is, right? But the money's not the important part. That's like kind of the non-issue. It's the energy that you are taking, right? That energy is what you're looking for. When you move into that, that energy will then start increasing. As that energy increases, you will find opportunities, options, and capabilities that you had never seen before. Those networks will start opening up, opportunities start opening up, but they were never there before because you weren't in the energy of receiving that. So once you move into it, it's like, man, I can't wait for the next 20 bucks so I can walk it down and pay it off on my credit card. And you take that sort of attitude towards it, then I assure you, one day you are going to be out of debt. And when you are, talk about a feeling change, man. All of a sudden, the world becomes a much brighter place. All of a sudden, you are looking at options and opportunities that you never had before because you have acquired such a flow to pay off your debt. And then one day the debt was paid off and there was nowhere to go with the money but into assets. And now you could take your opportunity there to start diving into luxurious experiences and start falling back down on the wedge, right? Falling down the wedge of inequality, even though you look awesome with your new car. Or you can move up onto the asset holders. Now, if you read this article, you're going to find that all the consumers out there are asset holders. Their assets, their house prices, rental properties, all the stuff that's gone up in price has given them the ability to consume more. I look out there at some of the landlords that I know, and they're absolutely doing well. They're taking vacations, driving new vehicles. They're doing all the awesome stuff out there. And a lot of people are going to be like, yeah, they're the problem. They're the ones and all that. And I'm like, no, this is the absolute Cantillon effect playing out. You have to recognize what it is that's going on. And now to think, man, into the future, this is going to be an easier environment to work in. No way. Not in a million years is it going to get it. Well, I mean, a million years will. No way is it going to get. No way. No way is it going to get into an easier environment, especially not in the next few years or even decades. What I see is ever increasing amounts of separation, and what you are going to have is literally two-tier economy, not a case-shaped economy where you have like this separation. You're literally going to have two economies: those who are able to be asset holders and those who are attempting to work every single day to pay their bills. And those who work every single day to pay their bills, they will still be able to become asset holders. It's just going to take a whole lot of effort out of them. Right? Meaning that it's not their day job that alone is going to do it. Their day job is barely going to cut it. They're going to have to do their day job and a side hustle and do other things and cut back on their expenses. And as much as depressing and horrible of an event that might feel for a lot of you out there who are already struggling, I don't know what to tell you. That's the problem we are going into. I'm not going to sugarcoat. I'm not going to give you any other explanation. There's no politician who's going to come and save you, by the way. And if you're listening to somebody who believes that there is somebody who can come and fix this stuff, they are very delusional, right? It's pure imagination, artistic fantasies. It's not going to happen, right? Cantillon effect has been playing out for, excuse me, has been playing out for thousands of years. He described it from hundreds of years before he witnessed it, and it's going to happen hundreds of years after we're gone. To recognize these economic forces is going to give you the absolute best position that you could ever possibly take, and to know that it's not going to be something that is going to manifest into existence some better way of life for you. Like that's not an option. You know, we have to look at the better way of life as something that we have produced, and how do we do that? Like, where is it that we need to go in order to acquire these things in our life? So many people are like stuck in this idea that there is going to be like, I don't know, like there's going to be this trigger moment in the future in which that all of a sudden, like, the relief of stress and pain and and all the capabilities that people were looking for is all of a sudden going to be there. Like, I don't know what it is that people are anticipating could happen to create that environment, but all I see is the working class individual going to struggle ever increasingly more going into the future. At the same time, that working class individual will have more opportunities today to get themselves onto the other side of the wedge than they have ever had before. See, that's another thing. Even though the wedge of inequality is growing as deep, or is being driven as deep as it is, the capabilities or the options of the people to acquire what it is that they need, like the tools being produced out there essentially for the average everyday person to acquire in order to get themselves on the other side of the wedge, is more prevalent today than at any time in history. And I don't know if people can recognize that. That's like that is probably one of the biggest, like, missing, like, people thing that people are missing right now, is that there is more opportunity today to make it onto the other side of the wedge than there has ever been in history. And I just don't understand why more people aren't taking advantage of it. Like, even I don't take enough advantage of it, and I feel like I'm doing, what I want. Like, I do what I want. It's just like, I don't think about, like, I don't think about anything being in limitation. If I wanted whatever I want, I can go do whatever I want, right? And so I don't think about me being in a limitation because of what it is that I have done, as far as being able to be in some sort of flow, right? Like, it's not just my day job. I do side hustles, I do online stuff, I do all kinds of things. And by doing that, I have been able to put myself in a position in which that I can pay my bills on time. That was my goal. That's it. Like, now that I'm able to acquire, over $100,000 in assets, liquidable assets even, and then, the house equity has gone up so much, it feels like, yeah, I know how it is that the people on the other side of the wedge are feeling. Am I on the other side of the wedge? Not really. No, I don't have like cash flowing assets to the level that it could pay me to keep my existence going. Like, I'm not in that position. I have to work a day job. I have to do my side hustles. I have to do these things. But do I have to do every single one of those things? No, I don't have to do every one of those things. I choose to do every single one of those things because I like being in the flow. And by being in the flow, I'm able to position myself to acquire the assets. And over time, hopefully, I can build up what I am going to be calling the hypothetical money machine, right? That thing that is spitting out money to me, whether it's rental properties, dividend paying stocks, businesses, there's something out there. I want to have that in my existence and something that I could possibly hand off to my family. Now, that's my goal. None of that includes fancy cars, fancy trips, fancy clothes, like none of that stuff like that. That's not part of it. I'm not really caring about any of that. But being able to have those things in my life, those assets, I will know that regardless of what it is that I want from my personal life, being on the other side of the wedge would be a hell of a lot easier with that than without it, right? So that's it. That's the entirety of what it is that's going on out there. But if you want to complicate it, it's easy. There's plenty of complication to be had. But to know that this is something that is going to be playing out and it's going to continue to play out into the future, you're going to have to know why it's happening and what it is that you can do about it. Because the idea of just having a regular day job, a good job, that should be enough. And I get that. It should be. Like, we grew up with the idea that a 40-hour work week is enough, but it's not. It's not. Maybe it is for some people. Some people might be able to work 4 hours a week and get away with it, make $1 million a year. That's fine. Most people are not going to be able to do that, right? Because they're not in a position to have acquired the assets that they need in order to only work 4 hours a day. They don't have the helpful, useful information to provide to the entire globe out there so that they only have to work 4 hours a day. I wish that was the case for me. It's not. I work much more than that. In fact, after I'm done with this, I plan on going to work later on this afternoon at my side hustle calling bingo because I am just in a constant state of being in the pursuit of excellence. I don't necessarily want to pursue pleasure, right? Although the pleasurable experiences, they seem to pop up even when I'm not even looking for them, right? Like the actual chasing of pleasure is what causes the pain. You chase the excellence and pleasurable experiences as the result of it. Right? And so that's what's funny about the whole thing. Who do we got here? We got Dishes, who's like the video. 27 minutes into this, man. I'm just babbling on. All right. I got my tickets to Vegas. We're headed to Vegas Friday night. I'm going to leave out Sunday. It's going to be a really quick trip, but it's going to be a lot of fun. I'm looking forward to it. And, oh, yeah, Zuber asked me to speak at this one too. I couldn't believe it. He asked me just the other day. He's like, hey, man, are you wanting to speak Saturday at, like, I think they even said the last slot. That's like the keynote position. And I'm like, oh my gosh, man, you give me 2 weeks notice to do this? Hell yeah, I'm going to do it. You bet. I'll get up there on stage. Give me the mic. Let's see what happens. It's amazing on how nervous I was to go to the Rebel Capitalist to speak. And here it is going to Zuber's, and I have no idea on what it is that I would say. In fact, I'll probably figure out what it is that I'm going to say on the flight down. Like, I'll take some notes and kind of come up with an idea of what it is that I'm going to talk about. But I love it. I love the idea that I've actually made it to like speaking engagement level. Like, I actually do these live events. Like, I go to these live events and I speak at them, and like, that's a real thing. Isn't that incredible? Yeah. All right. You took land from the previous owners. If we want to be frank with the local wildlife or the locals, but if you go back far enough, we all share the common ancestors, so no one here first, we all were. Mike Jones, I make the repairs to the buildings I buy. Challenge your own property rights and leave mine alone. Does the 1% need the 99%? Well, I mean, I think well, what do you think? Of course they do, right? They need everybody else to drive the truck, to flip the burgers, to do all that other stuff. Like, the system isn't designed And that's where I think a lot of people are misunderstanding it. The people who have taken full advantage of it have designed their economy around it to take full advantage of it. So, yes, it appears to be designed when they do it in such easy, with such ease. All these financial institutions with all their buddies take full advantage of the ability to borrow money and buy cash flowing assets, and they all pat each other on the back and they talk about how awesome they are. While meantime, we're having to flip the burgers, drive the trucks, grow the food, do all the other things that are going on out there. And it seems like they should have some sort of level of respect or appreciation or something, right? They should have it, but they don't. Nobody does. Like literally nobody. Do you appreciate the person who put the bottle of water together for you? Like I'm looking at a bottle of water today. I don't think about the person who put that together for me. Right? I just think about me wanting a bottle of water. You know? I don't necessarily think about the person who grew the carrots. I mean, I would love to think about that person individually and say, hey, man, I really appreciate you taking time out of your day to be so good at growing carrots so that I can enjoy carrots. I don't do that. Nobody comes to me and says, "Hey man, thank you for doing such good job sales." I mean, unless we did a deal together, but nobody comes in off the street saying, "Hey man, I was just passing by your store and I thought, man, I really appreciate you doing all the hard work behind the counter there selling lumber. Thank you, man." Who would do that? Nobody, right? That's not a thing. That's not a real thing. Nobody cares. Nobody cares about the lady who's ringing up the groceries. Right? I mean, some people might. There might be an individual. I read a story of a lady who was 92 years old working retail, and some lady saw that, thought it was absolutely ridiculous, and got a GoFundMe page for her, raised up $100,000 for her. And I'm thinking, $100,000 probably would be spent pretty quick at a 92-year-old. Health care issues and stuff like that. I don't know how much $100,000 would actually really help. Can you retire on $100,000? I mean, it might ease the burden, the little stress, but I bet you she still shows up for work. All right, let's see that super chat. Let's go check that out. We got 33 Larry Bird with the $4.99. Thank you so much. UE in the house. Thank you very much. I appreciate that super chat and all the support for the channel. Amen, brother. Yeah, I hear you. Thank you for being here, Standard Nursery. All right, learn how to debate ideas instead of take your meds. You don't belong in the discussion then. Weird. Your ideas would end the complete feudalism. Okay, what kind of day job do you have in Astoria? I sell lumber. I do retail sales. I do retail sales in the lumber industry. I call bingo. I do YouTube videos. I do online hustle, selling the UE University. I don't know. I do all kinds of stuff. I mean, I've built things, built tables and stuff like that for people, and whatever happens to come along at the time. Like I'm always in a constant state of thinking of the next video or the next opportunity or the next option. And I don't know what it is that other people have for goals. Like other people out there, I see them like I see these new trucks going by, and I'm like, what in the world? How come it is I drive like the ugliest vehicles in town and don't feel like I could really go out there and buy one of these new trucks? Like, why is it that I feel that way? And then I have to remember, it was just like, dude, do you remember what you've accumulated over the last few years, considering you haven't bought a truck? It's like, oh yeah, all the assets thing. Yeah, the liquidable assets. Okay, I forgot. Right? It was just like I literally cut back on everything so that I can deploy all my extra money into a position in which that I think is going to be a return. Whether it's a speculative asset or some sort of dividend stock or something of that nature. I don't talk a lot about the investments that I go into good just because I think that's a personal thing that every individual needs to do for themselves. Like, you really need to understand why it is that you are putting the money towards the positions that you are doing. If you are wanting to take a game of gambling, there's plenty of poker machines out there in the world to go play games with, right? But if you really want to put yourself into a position in which that is going to benefit you in your life, you should really know it from your heart, right? And that's why I don't share it. It's not for you. This is for me, and you need to figure out how to use this information to figure out what it is that's for you. You know, and that's why I find it like, a lot of people saying, "Man, what do I do with $150,000 that I've been able to save?" And I'm thinking, dude, you saved $150,000, and you're asking me what to do? Do you realize that you are just one of a handful of people in this entire country that can do that? Seriously. And then you go and you look for advice. I'm like, man, whatever it is that you are doing, even if you don't feel confident in it, is the right thing. Right. Now, if you just take a little bit more confidence in yourself and look to where it is that you can get a return on that, you're going to be doing very well. Right. So to come to me and ask me what to do with $150,000 that you have managed to save, I'm thinking, man, that is something that nobody can do. Right. That is a very rare thing. And you must be doing something very well in order to do something like that. So appreciate your position. Right. I mean, I was talking to a friend of mine who says something very similar to just that. They're like, I don't know what to do. I mean, it's so crazy out there and all that. And I'm like, you've done so well. How much debt do you really have? And I'm like, none. And I'm like, you have no debt, and you have over $100,000 in assets and whatever it is you got. And they're like, yeah. And I'm like, how awesome of a position you're in comparatively to the rest of the world. Yeah. I mean, just think about that for just a minute. You have no debts and you have a whole ton of assets comparatively to what it is that most people have. Like, comparatively to the top, that ain't nothing. $100,000 ain't nothing, right? Not comparatively to the top. But comparatively to the majority, to the 80% of the people out there, that is so good, right? And considering that you still have the capabilities of working, man, talk about a position to be in. That's like the position of all positions, super nimble, easy to, you can travel anywhere, go anywhere you need to in order to do your thing, and then you have zero debts to deal with. Yeah, right? Talk about awesome times. I look broke, show up to a vendor and a new test and see what kind of discount you get, right? Show up in an old Camry, they're going to believe it when you're watching margins. Started way back with fire, yeah. Well, I think fire was more of a symptom of the economics, right? Like, they would never have had that capability, or it wouldn't have been such a trending thing if the capabilities of them to do it weren't there. And so to think, well, it started with them doing it, and no, it started there with the symptom of them doing it. That's what happened, right? There was so much expansion, so much capabilities, and so much money flow coming in that the people who understood it and recognized it positioned themselves accordingly. And then to blame them for it is not right. They're not to blame. They're a symptom, right? They're a symptom of it. And you say they shouldn't do it. It was just like, well, of course they should. That's what humans do. When they recognize that position, they move towards it. And then people who didn't do it get upset that they didn't do it, and now they suck way down at the bottom, stuck, stuck sucking it, right? Whatever. I don't know how do you want to put it, right? They're not doing very well, and then they want to blame other people for it, and they say, hey, you're the reason why I'm so far down the line of inequality. And it was just like, well, they're not the reason, right, for it. They're the symptom of it. Did it occur? Absolutely. If it wasn't that person, it would have been a different person who did it, because their void essentially needs to be filled with somebody there doing it. And so when you think about how it is that this wedge of inequality continues to grow, it's going to then be in a position in which that, like, the fire idea that, free, what is it, free, independent, retire early, whatever, financial independent, retire early, that's going to be something like from the get-go. Like, how quickly can we get ourselves into that position from birth, right? And that's like kind of the idea, even with the Trump checks, the $1,000 Trump baby checks or whatever he's doing. I can't remember what the call of it is, but anyway, this is essentially getting them, like trying to get them onto the other side of the wedge early, yeah, getting them into asset allocation early. Funny how you say about silver. Most were saying at 50, they were waiting for it to go back to 20. Should carry debt in my pocket more often. They can artificially bring down the prices of gold and silver, but they cannot do it for too long. In the long run, metals will prevail while the dollar keeps losing purchasing power. Yeah, J Pedro 666, or no, I'm sorry, not 66, 66. Sorry about that. I didn't mean to throw that other one on there. Um, I mean, I don't know. Like, if you think about it, like, I think the manipulation game is a good one, personally. I think it's a good one. Not because it's good for the economy or good for the powers that be or good for, whatever. I just think it's good for me personally because I want to accumulate a lot of silver at a really cheap price. And if they want to make it artificially cheap, suppress the price, I would like to take advantage of that. It's an absolute gift to the average everyday person to have that occurring in their life so that they can take advantage of it. And if they don't take advantage of it, then they miss out on the opportunity. The moment that that is relinquished, then you're locked out. Like your chances of being able to get into a game that can protect you, provide you with an insurance policy, and all the wonderfulness that I claim is coming from silver will be lost if the price moves up to $500, $1,000 an ounce. Like you won't be able to do it in the same fashion. Now, don't get me wrong. I will be loving like, woohoo, yay, right? Okay, that's awesome, but it's not going to be awesome for the majority of the people out there. So what is awesome is something that they could have in their life that does give them that insurance policy away from the third party claim. And what can do it better than silver? Nothing. Like literally nothing out there is better than silver for that. And if you price them out of their insurance policy, then not the average everyday person is going to be in it. They're not going to be there. They're going to be attempting to do it with something else. And that's quite unfortunate. Like they could try and do it with silver, but silver at $500, $1,000 an ounce is not the same as silver at $20 an ounce. The downward, like, the downward risk at $20 is very low, right? Like it's really, really low. But the downward risk at $120 is incredibly high. Like that's not insurance. That's speculation straight up. And don't get me wrong, it could be a great speculative asset if you want to be in speculative assets, but I don't want to be in speculative assets when I'm looking for insurance. Right? And the insurance is getting out of the third party risk. And if that is locked out and I can't get out of it, then I'm exposed to the third party. I don't know how many people see it that way, but I do. And I mean, if I could have silver at 20, 25, $30 an ounce until I'm 80 years old, that would be wonderful. Right? I think that that would just be a great experience. And then at 80 years old, let it go to 500, $1,000 an ounce. And that way I've kind of accumulated all that silver throughout that time in order to achieve some of the things that I wanted to achieve, which is mainly to hand something off to the future generation. Right? So that, Freddie isn't burdened by trying to deal with an economy that is driving a wedge of inequality into probably the worst case scenarios going into the future. It's just like, how do you protect them from that? All right. Simon, do you think gold is undervalued as well? Comparatively to what? Yeah, compared to what? Um, because like undervalued what to the dollar? Like everybody says the dollar is losing value, losing strength, losing all this. And I look at it even on the dollar index, which is what people are kind of looking at a lot of times. And I'm looking at the dollar index and I'm thinking to myself, it's really not that bad. Like it's been way worse than it is today, and it's been stronger than it is today. So right now, where the dollar stands isn't exactly like, super weak dollar. It's not that bad. Unemployment's not that bad. Inflation is not that bad. all these things don't seem to be that bad. And now when I think about what is it bad for, it's bad for the average everyday dude who's trying to use his job in order to have a standard of living that is appropriate to what it is that he felt that job should provide. That is bad. That is very bad. But who's doing the consuming? The top 20%. Top 10, 20% of household incomes. They're doing all the consumption. For them, it's really not that bad. So when you start lining up where it's not that bad to who it is that it is bad for, the people that it is bad for are really just not that important to the economy anymore. I mean, they're important. Every individual person is important. Don't get me wrong, right? You're important. They're important. Your neighbors are important. Everybody's important. But when you think about what it is that's happening with the economy and what it is that the financial institutions and the administration can do in order to create an environment of economic activity, it doesn't come from trying to get people to go back to work. It used to be that way. It used to be that way. And that's why a lot of people feel hurt and, upset about the situation, is because that's how they used to deal with us, is that they would try to get us to go to work. Lower interest rates, get corporations to borrow money, taking that money, going out there and investing it by hiring people and getting those people back to work. And that was the backbone of the American economy, right? But that's not the case anymore. You go back to work, it doesn't matter. You got a job, it's just losing its capabilities. Go and get more pay, it doesn't matter. It's still going to fall down the line. So when you think about what it is that's happening, you're not important. But who is? Well, the people who spend the money. Who are spending the money? The asset holders, those who have gotten into assets throughout their life, they have gotten more money from it. And because of that, they're like, hey, what do you do with more money? You spend it. You spend it on luxurious experiences. And then the wedge of inequality grows even worse. Right? I find it funny how people say, oh, you should listen to this person. He explains this way better on what can fix the economy. And I laugh right there and I'm thinking, well, what is he selling you? Right? What is that person selling you? Because if they have this idea that they can fix it, they're selling you something. There's no fixing this. There's a condition in which that you can place yourself to deal with it, but you can't fix the economy to bring back working class jobs or working day jobs, class jobs, to be able to provide a decent existence for the average everyday person. Like, that is not a capability. That is something that is going to fall further and further down the line. Yeah. And anybody who says anything different, like they have an idea to fix that, is lying. They're not lying. They're either delusional or they're selling something. Do you think the dollar index will go to 70? Do they need it to be there? No. Well, I don't know. I mean, I very well could. I don't think they need it to be there. I think what they need is what they got right now. This is what this like people say, well, what are they going to do? And I'm like, they're doing this. This is what they're going to do right here, right now, what they're doing, right? They're not changing anything. They're doing this. If you elevate the inflation expectations going into the future, it's going to meet the Fed funds rate. The Fed funds rate is going to be neutral. The economy is going to be unrestricted. And the top 20% of household incomes are going to continue on with their operations. And the economy is going to be incredibly resilient while everybody's scratching their head wondering why their jobs aren't keeping up. This is what's going to happen. This right now, like this. And so they're not going to change, like, in my opinion, they're not attempting to change anything about anything. Like, their goal is 2% over time, right? Well, what are they at? 2.3, 2.8, whatever it is. That's not that far from 2%. Who the hell is saying that 2% is even a real target, considering that they have never, ever once in the history of their existence have ever been at 2%? That's another thing. Like, all these economists out there saying, well, when the Federal Reserve gets to 2%, and I'm like, what? The Federal Reserve doesn't never get to 2%. They never have in their history of their existence. I'm not sure why it is that people would believe that they're going to in the future. That doesn't make any sense at all. Like, none. I don't get it. Like, none. Like, I sit there and I hear people and I go, what? Right? Because it doesn't make any sense. The Federal Reserve has never, ever once in the history of their existence ever been at 2% for any length of time. They've passed by it. right? Either being above or below it, but never once consistently we're at 2. How it is that people think that they can do that is beyond me. They can't. They don't. They won't. It's not going to happen. You know, it's silly. It's just like whatever. So then once I understood that part of it, I stopped thinking that way. I stopped thinking that the Federal Reserve was trying to get to 2% because never once have they ever been at 2%. But however, they do have statements in their own words saying that they would look for an inflation that was moderately above 2%, and that persistently high inflation was the problem that they needed to solve. They talked about being above and creating a long-term inflation expectation of 2%. Now, if you had a monetary policy that was about communicating about interest rate adjustments, not the interest rate adjustment, a communication about the interest rate adjustment. If that was your monetary policy, and you had a monetary policy that was operating at 0, so no interest rate adjustment could be made because you're at 0, no more downward shift, would you have the ability to talk about interest rate adjustments? I mean, you could talk about raising them, which would be painful for most people, but you would have no ability to talk about lowering them because you're at the lower bound of 0, unless you were talking negative interest rates, which I doubt will take place anytime in the future unless you have a cashless society, and that will change everything. But if you're operating at 0, there's no communication about interest rate adjustments. There is no interest rate adjustments. There's no interest rate adjustments. There's no communication about interest rate adjustments. There's no interest rate adjustments. There's no monetary policy. 0, none, no monetary policy. They go, okay, well, fire up the printing presses, buy a bunch of bonds, and we will promise to keep interest rates 0 for the remainder of the future, right? Or until the future, until at some point in the future. That forward guidance and quantitative easing was the new monetary policy. It wasn't the interest rate adjustments anymore. During that time, they figured out a way to communicate about interest rate adjustments that would have a powerful impact on the markets. Now, with elevated inflation, inflation expectations, elevated Fed funds rate, they have not only the ability to adjust interest rates because they're elevated. Can't do that at the lower bound of 0, but you can do it if they're elevated. So now here we have elevated Fed funds rate based on an inflation expectation that is elevated, and we have all the communication in the world to talk about interest rate adjustments, which is the most powerful tool that they use. I'm the only one who's going to explain it this way. I am the only one, right? Nobody else is going to talk to you like this. Nobody's going to share this information with you. They're going to talk about all this stuff that Warsh is going to, like, the new Fed chairman, right? They're all going to talk about how he's going to have this huge strategy shift to the Federal Reserve. Bogus. No, not real. Not real at all. The Federal Reserve has a consensus statement that they are attempting to achieve. The long-run statement on goals, strategies and goals. Right? Within that statement, the FOMC is attempting to achieve that. They don't make it up on the fly. That's another thing that I just don't seem to understand why people talk this way. They seem to think that the Federal Reserve just makes up their strategy on the fly. They don't. They have a consensus statement that they try to achieve every 5 years. Within that statement, they straight up tell you, we are attempting to get to a 2% target, right? 2% over the long run. Now, that attempt in itself is them communicating about interest rate adjustments. If the inflation achieved the 2% target, it would not stay there. It wouldn't stay there. It would fall below it, rise above it, be somewhere other than 2% because it never is ever been at 2% for any length of time. So the communication about the interest rate adjustment is the monetary policy tool. And the communication about attempting to get to a 2% target is the deployment of information. If they didn't have a goal to talk about, then what would they tell you? We'll tell you when we get there. Yeah, no, of course not. Hey, we're trying to get to 2% over the long run. Stubborn inflation. Stubborn inflation staying up there at 2.3, 2.8. Darn you. Like how bad is that really? Some central banks around the world literally target 1 to 3, right? With the 2% over the long run kind of idea. That's their goal. We want to be somewhere between 1 and 3% inflation. That's what the world says. The central bankers say around the world. Not all of them, but a good fair number of them. It's really just the United States who has a strict 2% target goal that they deploy out there to the people to understand. But there's never been a time in history in which that they have ever been there. I don't know why they would think it's a goal. It's not. The communication about it is a goal. The communication about it is a very effective tool. Yeah. All right, moving on. The spokesman of the Fed has zero control over interest rates. He is literally a spokesman. That's right. He is literally a spokesman. Yeah. He has his ideas. He can share his input. He can give his thoughts and ideas or whatever, but he is not in control of anything other than the communication. He speaks on behalf of the FOMC. That's it. So when the world is saying, "Hey Fed, what is it you're going to do with monetary policy?" It's the chairman who goes up and delivers the message. Right? He says, "FOMC, what do we got? Oh, you guys think it? All right, whatever. Okay, here's the message, right? Whether he agrees with it or not, it's like he delivered the message for the FOMC. Yes, I think Trump is going to replace the Fed chairman in Simon with Tom Holan. um, the dollar index will change the yen being stronger. Isn't the Fed investing in foreign debt better than better for them to lower the index of the dollar lower? Um, well, I mean, I guess like if you're talking about the fine tuning of like the currency markets like that, I don't know if the Federal Reserve really wants to play in that game. Yeah. Like I really don't think they want to. I think they would much rather leave that up to the government to deal with than to try and step into that. It's like a Pandora's box kind of thing, because once you're in there, you're not going to be able to get back out again. So I think they would much rather leave that, like, and give the capabilities of the governments or whatever to do. But I think that they would much rather not participate directly in that for now. If there was, well, if you could add a digital component to it and remove cash from the system and then control where the currency goes, then I think they would probably want to play in that game a little. They would be a little bit more open to playing in the game. All right. But ultimately, you won't be able to control what would happen if they did. So if you had a digital component, digital currency, tokenization, stuff like that, where you can control where it is that that money is going and how it's flowing and where it's flowing to and stuff, then yeah, they would be much more open to the idea of interfering inside of the currency markets in that fashion, like serious intervention, not just temporary or certain programs or something like that, but to be full out like engaged in that idea. Until then, I think that's more of like a something they would rather leave up to the government. All right. Yes, I think Trump. Oh, we already read that. Live chats. All right. Old saying goes, don't shoot the messenger. Yeah. Yes, think people like the Trumps do real work. They grift and make deals, etc. The poorest work the hardest. The rich do the work, enjoy, and therefore it isn't work. I call greenbacks gazabugs. Trying to buy foreign debt is a minefield. We cannot control our own debt. Imagine trying to control another country's financial policies. Oh, I totally agree with that. Like, I mean, even the ownership of the United States debt doesn't seem that to me, except that I know that it's the only debt out there that is guaranteed to pay with zero chance of default. And now I know a lot of people might push back against it. I don't dis I don't have any belief in my imagination of the future of anything that could happen that a treasury wouldn't get paid. Like the treasuries will get paid. Every single one of them, every time going into the future with very little doubt. Right. And now a lot of people want to laugh at that idea. They push back against the idea. They want to talk about all the ideas of what it is that can happen that would cause a, treasury default. I'm going to doubt that it'll take place. Reason? We have a printing press to pay any bill we want. So there is zero chance of default. None. Zero chance. However, there is zero promise of being able to guarantee the purchasing power of that debt payment. So even though you will get paid back because there's zero chance of default, there is no promise that what you get paid back in can buy anything. That's where it breaks down, right? And this is where I think a lot of times people are like, well, what about a worry of a debt default or something? I'm like, that ain't going to happen. That's not even a real thing. Yeah. But the chances of those purchasing power not being able to provide any goods and services to you, that is a real thing. And that is a real possibility going into the future. And that's one of the reasons why I'm not really into the idea of holding a whole lot of U.S. government bonds. In fact, I like being outside of that by holding silver, right? By being outside of that third-party risk. So if you are inside of nothing but bonds and stocks and stuff like that, you are exposed to the third-party risk. You're exposed to the financial conditions, you're exposed to the government, you're exposed to everything out there. But when you are sitting in a precious metals and Bitcoin to a lesser extent, you're outside of that third-party risk. You're not dependent on them. You're not dependent on anything that goes on in there. And let the whole thing crash. It doesn't change anything about your position. Okay? And that's where I think a lot of times, people get, like, what do I do? What do I do? And I'm thinking, well, you got to understand what it is you need in your life. Do you have insurance? Maybe you should get a little insurance. Do you have something that pays a return? Bonds, dividend stocks, a business, something out there? No? Maybe start buying into a little bit of that. You don't have to buy a lot. You don't have to go out there and throw $10,000 at something. You can literally throw $50 at dividend paying stocks once a month and be playing in the game. All right? People say, well, what's the point of that? What's the point of $50 a month? In my mind, it's not the money. The money is not the important part. So many people get focused in on the money. What it is the energy that you're in. You get into that energy of being into cash flowing items, dividend stocks, rental property, something of that. That's what you are doing. That's why you're putting $50 a month towards it. And then you put it to $50 a week or whatever it is that you're doing. And then you're opening up the opportunities of what it is that's out there in the world because you have moved into that energy. That's how this is done. See, I don't know why people make it so complicated. Right? It's not, they make it complicated because the money is the focus, and that's where their problem is. Right? When you focus in on the money, you'll make it scarce. You'll make it difficult. It'll run from you. Right? It's not attracted to people who are desperate, people who are in this wanting, needy feeling, right? That's not where the money is attracted to, right? And so to understand what it is that money is attracted to, it's attracted to helpful, useful, important, production. These are the things that it's attracted to. And so if you're being helpful and useful, productive, then it's just a matter of time before the things in the universe that recognize your helpful, useful productiveness, they want to start appreciating it with providing you with abundance. And it doesn't necessarily come in money. Right? That's another thing you have to think about. It may not necessarily come in money. It may come in opportunities or building up of networks or something of this nature, like literally physical items is showing up in your existence just because you happen to place yourself in the right place at the right time. Okay? And this is the understanding that I think a lot of times people will miss, is that if you just get yourself into the energy of it, you will find that the opportunities really start to present themselves. And so it's not hard. I mean, being in the energy, you don't have to do it with $50, you can do it with $5. You can literally do it with $5. Right? And it doesn't even really take the $5, but it does take some sort of effort, and so you have to give it a number, right? $5, $50, $500, 5,000, whatever it is to you, it doesn't really matter, right? The money part of it isn't the important part. It's the energy that you're stepping into. That's the important part. The money will flow. It'll figure its way out. And the more you try to figure it out, the harder it's going to be. Just know that if you move in this direction, this is the direction in which that you are headed, right? It's the next right step. That next, you know, not buying the coffee and cigarettes first thing in the morning before you head out into your day, you're going to give those things up and then use that $20 to then start putting towards your investments. And then at the end of the month, with your extra $600 that you have been normally buying a coffee and cigarettes with every single morning, you're going to be able to then put yourself in a position that has a cash flow to it. You're going to do this as an average, everyday working class individual. Is it going to make a big difference for the first year, 2 years, 3 years? Not really, right? But over time, as that compounding interest starts to build up, and the more that you position yourself into it, the more you're going to recognize that you need to do that. As you watch your buddies start to feel the suffering and pain of what it is to have nothing in their life and no emergency fund and no insurance policy and nothing else going on, and they're spending every day down at the bars dumping money into weed, and you're thinking to yourself, man, what are you going to do when you get older? There's nobody coming. There's nobody showing up. I mean, I seen it just recently. I just seen it. I don't want to talk too much about it, but I know somebody who made no effort to do anything in their life whatsoever and literally found themselves pretty much in the danger zone. Right? And I don't know exactly how to call it the danger zone, but no place to live, no family, no inheritance, no anything going on. I mean, luckily that he has something as far as an insurance going on, because and I even wonder how long that's going to last for. It's just like I look at it and I'm thinking, man, you are far from fine. Like, you're about as far from fine that it gets. All your life, I've known this dude my entire life. Like, not my entire life, but pretty much. Like, since I was a young person, a young man, right? In my teenage years. And I watched him the entire time and never once ever made any effort to try and save anything for the future. Not once. And now he's pretty far from fine. Right? And I think to myself, man, why does this dude exist in my view? Right? Like, what is the lesson I'm supposed to learn from this? Because it looks scary as hell. I mean, I have no idea. Like, I have no advice, nothing. Like, I'm just, bro, now what, right? And so I just wonder, I'm like, man, why is this guy in my view? Is this a lesson? Like, is this my lesson that I need to learn? And it's just like, if you don't do something, this is how you're going to end up, because what it is that he's facing is going to be something that's going to be quite prevalent into the future with many more people. And if you don't do something now to prevent that kind of outcome, it's a guaranteed outcome. I don't know what other people are waiting for, but they better do something, right? And they got to do it for themselves because nobody's coming. $2 from Red Star 7311. Thank you so much. Do you feel silver and gold stocks are good as coins? No. But don't get me wrong, I think it's a good speculative thing to get into if you're looking for the price move, is to get into the paper stocks, or this, into the paper form of gold and silver. But are they the same as coins? Absolutely not. Not even the same thing. So why are you buying? This is the important part, right? Why are you buying this gold and silver? Are you buying it because you want to take advantage of the move? Then it doesn't matter if it's gold and silver. It could just be anything at that point. You're just trying to make money off of the move. So if that's the case, then you don't necessarily want to be in gold and silver coins. Like, that's physical item. It's kind of bulky. It's a pain in the ass. You got premiums to pay and all that other stuff. That's not something you're really trying to take advantage of the price moves with, right? Going down to the coin store, picking up coins today, going back down a couple of days later and selling them to them again. No, that's not really what you do with the gold coins. If you wanted to make money off of the price moves, then definitely, there's the stocks, they're all available, but it doesn't necessarily need to be gold and silver to do it with. You can do it with anything you want. Now, buying into gold and silver coins, now you got something that's physical outside of that third party risk. And now this is very important to understand because there's premiums that are paid for it, right? We even just recently learned when the prices ran up to their, over $100 an ounce, the coin stores essentially shut down, right? They were like, "New way, we are not interested in buying all these different types of silver, mainly because the refiners weren't buying it at that high price." Now, this is something that is very concerning for the people who are hoping to take advantage of the price of their silver. Like all of a sudden they run down with a whole stack of silver dimes. They're like, "Woohoo, give me my money." And the coin dealer's like, "No, sorry. We might give you, a fraction of what the price is, but we're not going to give you full face value or full spot price value for this anymore." Because essentially all the rest of the buyers out there in the world aren't buying it right now, not at this high price. Now, if you want to show up with the Silver Eagle, I don't know what it is. Like, I'm thinking junk silver, whatever. But if you want to show up with the premium stuff, right? The stuff that they know they can flip to another customer very easily, they'll buy that stuff all day. Wow. Talk about a change. Talk about a weird experience for a lot of people out there who had purchased maybe odd silver coins at, sales or whatever in order to get their silver stash, only to find that when the price moved dramatically high, that if they weren't holding silver eagles or maple leaves or something from the Sunshine Mint that was very recognizable and very desired, then they couldn't sell it as easily as they had hoped. Uh-huh. Well, a very strange event to take place. So you got to know what you have. You got to know why you own it, what pieces you have, like a variety of pieces. I mean, I have some stuff that like commemorative things that who would ever. It is just like it's not like a silver eagle. It's some commemorative piece. Like I got one, I forget who. It has some football players, like a 4-ounce coin or some 4-ounce medallion looking thing. It's really cool and all that, but I mean, yeah, it was just like who would really just buy this 4-ounce piece if it runs up to $500 and it was like, here, give me $2,000 for this, for this thing, as opposed to here's a stack of eagles. Uh, Volatility is your friend. If Bitcoin goes down, you can short it. Yeah, I see Bitcoin is crashing, not crashing. It's falling pretty dramatically. What was my buddy just sent me a text on it? Bitcoin down, world's ending. Ha. Sorry about that. All right. All right. Agreed, Randall. I'm not arguing either. There's no context, demeanor through text. I'm calm. I say simply dollar cost average into the stock markets, compounding interest, undefeated. Keep it simple. Saw someone say if the neutral rate was actually the goal, the Fed wouldn't set rates at all. Um, hmm. They wouldn't set rates at all. That I don't I don't know how to like I can't form an opinion on that because it just doesn't make any sense. I'm sorry. I wish I could I wish I could form something to around that, but I just can't. Of course, there's a neutral interest rate, and of course, there's the Fed funds rate. That's an interest rate setting policy, and there is some place where those two would meet. And yeah, I don't. I'm not sure how to address that. All right. Short silver. You'll be glad to Monday. All right. You should have shorted silver last week. Don't buy gold and silver to make quick money. They are insurance during difficult financial times. Yeah, and I don't know. Like I don't know if you've ever heard me say it any other way. Like I wouldn't even I had a guy offer me 10-ounce bars of silver, which I really should have taken now, but he offered me 10-ounce bars of silver if I would push his silver program or whatever, but he really wanted me to talk about how the Fed was going to destroy the dollar and inflation was going to run rampant and all this other stuff. And I'm like, bro, did you not hear me talk about like what my ideas are for the credible threat theory, and that if you push inflation expectations, you are going to totally give the power to the Federal Reserve that they are looking for. And here it is, you want to pay me in silver to do just that? No, thank you. Right? And so wasn't that weird? He's like, here, man, I want to pay you in the silver, but promote inflation. And I'm like, okay, I understand. I want the silver because I want to be out of that third party risk, and I really want the precious metals, and I appreciate getting paid in that. But the message that you want me to deliver is one that I'm going to totally give the power to the Federal Reserve that they are looking for. I cannot do this, right? I am an end the Fed individual, right? My hat says it right here. I know how to end the Fed. The problem is that nobody believes it. Everybody is thinking, man, you have to push back against the Fed and accuse them of inflationary pressures. That's how you end the Fed. That is not right. The way you end the Fed is not giving them the inflationary expectations that they are looking for. If you didn't give them the inflation expectations that they were looking for, their entire monetary policy would have fallen apart and they would not exist. It would have been something completely different. But it was delivered. Inflation expectations was delivered, elevated neutral interest rate, elevated Fed funds rate, the ability to communicate about interest rate adjustments. The Federal Reserve got exactly what they wanted. Right? Unemployment's not that bad. Inflation's not that bad. Right? The resilient economy is not that bad. The only person it's that bad for is the working class individual, and they told you that was going to happen. I mean, it wasn't like Jerome Powell didn't warn you August 27th of 2020. I mean, he straight up said it. And, we know that inflation is a very painful experience for the household incomes, especially those with lost jobs and incomes. However, it can pose serious, if inflation that runs too low can pose serious risks to the economy. They warned you. They warned the people. You are going to see pain and suffering going into the future. Don't think that it wasn't going to happen, And then all those individuals who are like, dude, here's a 10-ounce bar of silver. Talk about how it is that the Federal Reserve causes inflation. And I'm like, you have no idea what's going down. You have no idea how this is about ready to go down. Don't get me wrong, right? I love the idea of silver and being outside of that third-party risk. And ultimately, at the end of the day, had you positioned yourself in silver, you would be much happier today than, a lot of positions that you might have taken. But really, there is so much out there that you could have done besides just being in silver that would have had a return on investment, right? Cash flowing stocks, rental property, stuff like that. And so to think that silver was the only answer, I don't think that's the case. It's an awesome insurance policy. You stack it up, and when it runs up, you sleep really well at night. And if it falls back down to a very low price, you thank God that you have an opportunity to continue to stack. And that's what you do. I mean, that's what I do anyway. I don't know what you do. I'm going to call it quits here in just a minute, guys. My phone's dying anyway. I think Sarah wants to go hang out. The boys went to an Avatar movie, 3 hours long, 3D. Right? Got the 3D motion picture thing going. That's pretty cool. Simon, can you explain why the Fed will not deploy negative interest rates due to cash being in the system and waiting until currency becomes digital? Why will the Fed wait? Because if you go into negative interest rates and they apply a negative interest rate to your bank account, you're going to pull your money out in cash, right? I mean, would you sit there with, $10,000 or even $3,000 sitting in a bank account that had a negative interest rate, so that next time you went to it, it had $2,998 in it? Would you continue to keep your money in there? Of course not, right? You would pull your money out. So if there was cash in the system, then negative interest rates wouldn't work because everybody would just pull their money out and it would all be mattress money, right? That's like literally, that's a term that they use, mattress money, because that's what happened during the bank runs, back in the Depression era time, back around the turn of the century, is people would freak out about their money being in the bank and this bank collapse, and then they would lose all their money. So they decided to keep their money, and they had no place to hide it, so they would hide it under their mattress, essentially sleeping on their money, because that would be the safest place that they could store it. So that's literally the term that they used, was mattress money, hiding it under the bed. So when you think about what it is that's going to happen with the lowering of interest rates, if the interest rates was to achieve the lower bound again, if they were to drop interest rates and hit the lower bound, there is some expectations that right now, if they were to do that, that there would be some stimulation that would occur within the economy. But the only reason why they would lower interest rates to zero is if inflation fell and we had recessionary pressures kicking in. And so without inflation taking place, the neutral interest rate would be very close to zero. That's R star. Right? So with R star operating very close to the lower bound of zero, if the Federal Reserve was to take interest rates back to zero, they wouldn't be far enough below neutral to actually stimulate the economy. At this point, negative interest rates would be the only effective tool to use as far as interest rate adjustments would go. Right? You would have to go into negative territory. However, if you got negative interest rates within the economy, then people are going to start pulling their money out in cash, because cash doesn't have a negative interest rate. It's a zero interest rate tool, right? So it's just basically just always going to be a dollar. The purchasing power might get lost, but it doesn't lose the actual number, right? The face value of it doesn't change. The amount that you have doesn't change. So as long as you can pull it out in cash, negative interest rates in the banking system would then fail the bank system within itself, because everybody would pull the cash out. Now, if you didn't have cash and you were locked into the banking system through a digital component, now they can take it into negative territory. What are you most likely going to do with your money, especially if they were pushing the negative interest rate? You would take your money and go spend it. Right? You can't take it out in cash, but you can spend it on things. So talk about being able to pick up money velocity by dropping interest rates or threatening the negative interest rate territory, and you stuck in a digital component will then force you out of that and into the economy, spending that money one way or the other. Right? Or investing it or doing something with it, but the last thing you're going to do is keep it in the bank, right? Especially with that negative rate being applied to it. So this is like the ultimate goal of the Federal Reserve. If you were to have an interest rate adjustment policy tool again, you would have to have negative interest rates being a real possibility. And the only way to have it as a real possibility is to remove cash out of the system. So until that happens, I just don't see the interest rate adjustments being an effective tool. It's just not. It's just not an effective tool. It doesn't work anymore. Right? Not for stimulating. You can restrict the economy, you can raise the interest rates, but you cannot stimulate the economy with the lowering of interest rates. It doesn't work. Right? Nobody knows that, though. Only here on the Uneducated Economist do we know that, because we've hashed it out so many times. I'm going to go, guys. This was a lot of fun. Thank you for hanging out. We got 181 people watching with 118 likes. Thank you so much for reaching over and hitting that like button. Continue to reach over and hit that thumbs up button. By doing that, you're going to get the YouTube algorithm to spread this video around for more people to enjoy and see. This is very important information on why the K-shaped economy is occurring and essentially creating a two-tier economy, not necessarily a K-shaped one, but literally two different ones that are operating at the same time. And where it is that you have positioned yourself in life is going to determine on which one of those tiers you're in. Now, you can either be the working class individual who is career-based, trying to get the degree, trying to get the career going, doing all the business thing. And if you are not in a position in which that you can accumulate assets while doing that, most likely you're going to have to find ever-increasing amounts of business to then keep up with the fact that the deterioration within the economy and the working class individual making your bills harder to pay is going to be more prevalent going into the future. I know that's harsh. I know it's hard for a lot of people to hear, especially those who are on a career path right now that seems like it's an appropriate one. You're most likely going to find as time goes on that it's going to fall further and further and further down the line. The people who are going to be going up the line are the people who are moving into asset allocation, dividend paying stocks, rental properties, stock market in general, bonds, anything that's going to have some sort of return on it, especially your understanding, your education. That is probably one of the best places that you can put money towards if you are not understanding or aware of a capability or a possibility and you want to level up your skills. That is probably one of the best investments that you can do. knowing that you have to do something. Because if you're waiting for the politicians to fix it, it's going to fail, right? This is not going to get any better. It's going to get worse as time goes on. And I don't want to be a doomsdayer. What I want to do is I want to share why it's happening and then also share what it is that you can do about it. Because really, right now, I don't feel that there is a better opportunity than there ever has been in order to acquire a position in which that will have that cash flow coming towards you. You think about it. We didn't have a lot of the stuff available to us today that we had even 20 years ago. So take advantage of the stuff that we have today. Right? Get in that cash flow. All right, uneducated economist, you guys let me know.